You've got some money sitting in savings earning basically nothing. You keep hearing about people making money in stocks, but honestly, you have no clue what a stock actually is. Everyone talks about buying Apple or Tesla like it's obvious, but nobody's ever explained what you're actually buying when you click that purchase button. Hey, it's Ollie, and today I'm going to make what is a stock genuinely click for you. I've spent years breaking down finance concepts for people who thought investing was only for Wall Street suits or math geniuses. Here's the truth, understanding stocks is way simpler than the finance world wants you to believe. Let me tell you a story about a pizza shop that'll change how you think about ownership forever. But first, we need to start with what's really happening when you buy your first share. Imagine your friend Sarah opens a pizza shop. She needs $100,000 to buy ovens, hire staff, and get started. Instead of taking a massive loan, Sarah has a brilliant idea. She'll sell tiny pieces of ownership in her pizza shop to 100 people for $1,000 each. Congratulations, you just understood what a stock is. When you buy a share of Apple stock, you're doing exactly the same thing as buying a piece of Sarah's pizza shop. You own a tiny slice of a real company with real employees, real buildings, and real profits. The only difference? Instead of pizza ovens, Apple makes iPhones. But here's where it gets interesting, and where most people get confused about how they actually make money. Let's go back to Sarah's pizza shop for a second. Why would she give up ownership instead of just getting a bank loan? Simple, loans have to be paid back with interest, whether the business succeeds or fails. But when Sarah sells ownership shares, she gets money to grow without the pressure of monthly loan payments. Apple did this exact same thing back in 1980 with their initial public offering, their IPO. They sold shares to the public and raised money to build the computers that eventually became the empire we know today. Every company that goes public is essentially saying, "Hey world, want to own a piece of our business and share in our success?" But success isn't guaranteed, and that brings us to the two ways you either get rich or lose your shirt. Pause and think, if you own a share of a profitable company, what are the two main ways that ownership could put money in your pocket? Take a guess before I reveal the answer. Ready? Here they are, capital gains and dividends. First way, capital gains. If you bought Apple stock for $100 and sold it for $150, you made $50 in capital gains. The share price went up because more people wanted to buy Apple stock than sell it. Second way, dividends. Some companies share their profits directly with shareholders. Apple pays around $0 per share every quarter, so if you own 100 shares, you get about $24 every 3 months just for being an owner. It's like Sarah's pizza shop sending you a check for your slice of the monthly profits. But here's what nobody tells beginners, both of these can go backwards. Stock prices fall when more people want to sell than buy, and companies can cut dividends when times get tough. Which leads us to the million-dollar question, what makes these prices bounce around like a ping-pong ball? Stock prices move for one simple reason, supply and demand. If 1,000 people want to buy Apple stock but only 500 people want to sell, the price goes up until it reaches a level where buyers and sellers agree. Think of it like concert tickets, high demand, limited supply, higher prices. Short-term, stock prices can be driven by emotions, news, or even tweets. But long-term, prices tend to follow how the actual business performs. If Sarah's pizza shop doubles its profits, the value of your ownership piece should eventually reflect that success. The key word is eventually, and that's why investing isn't a get-rich-quick scheme. But where do you actually go to buy these ownership pieces? That's where the modern magic happens. Stocks trade on exchanges, think of them as massive digital marketplaces. The New York Stock Exchange and Nasdaq are the big ones where companies like Apple, Microsoft, and Tesla are bought and sold. But you can't just walk up to the NYSE and buy stock. You need a broker, companies like Fidelity, Schwab, or Robinhood that give you an app to place orders. It's like using DoorDash to order from restaurants. The app connects you to the marketplace, handles the transaction, and delivers your ownership shares to your account. Most brokers now charge zero commissions for stock trades, which means you can buy a single share of any company without extra fees. But before you start tapping buy on everything, there's one crucial concept that separates smart investors from gamblers. Here's what every beginner needs to burn into their brain: you can lose money in stocks. If you put all your money into one company and it fails, you could lose everything. Remember our pizza shop? If Sarah's business goes under, your ownership piece becomes worthless. That's why experienced investors diversify. They spread their money across many different companies, industries, and even countries. Instead of betting everything on one pizza shop, they own tiny pieces of pizza shops, tech companies, banks, and healthcare firms. When some go down, others might go up. The stock market has historically rewarded patient, diversified investors over long periods, but there are no guarantees. Every investment comes with risk, and anyone who tells you otherwise is lying to you. So there you have it, stocks are just tiny pieces of real companies, and you make money when those companies succeed through higher share prices or dividend payments. The key is understanding you're buying ownership in businesses, not lottery tickets. Here's what you can do this week. First, download a broker app and explore without buying anything. Second, pick 3 companies whose products you use daily and look up their stock prices. Third, think about how much you could invest without needing that money for at least 5 years. Drop that number in the comments. I read them and love seeing people take their first steps toward building wealth. If you want personalized guidance on your investing journey, head to nexusaicalls.com where we help beginners turn financial confusion into confident action. Remember, every expert was once a beginner who decided to start.